Based on the historical data and forecast, Bitcoin shows a fluctuating trend, but the forecast indicates a potential upward movement. The RSI consistently remains between 45.8 and 56.1, suggesting neither strong overbought nor oversold conditions. Considering the Bollinger Bands, the price has been fluctuating within the bands, indicating moderate volatility. To capitalize on the potential upward trend, I recommend a strategy that combines RSI and Bollinger Bands. I suggest entering a long position at $64,300, placing a stop loss at $63,800 to limit potential losses, and setting a target price of $64,800 for a profit. This entry point aligns with the forecast and keeps the risk-reward ratio favorable. To refine this strategy, I will incorporate the RSI levels. If the RSI falls below 40, indicating an oversold condition, enter a long position at $62,900. Set a stop loss at $62,500 and target $64,000. Conversely, if the RSI rises above 70, indicating an overbought condition, consider a short position at $65,000. Set a stop loss at $65,500 and target $64,500. The portfolio will prioritize the long position at $64,300 due to the positive forecast. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows an overall upward trend, consistently testing and breaching the 1920 resistance level. The RSI fluctuates around 55 to 66, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility and potential for price movement. Considering the forecast prices, which predict a continued rise to 1950, a bullish strategy is warranted. We will implement a combined strategy using RSI and Bollinger Bands to maximize potential returns. The primary strategy involves entering a long position at $1,870. The stop loss will be set at $1,820, just below the lower Bollinger Band, to protect against unexpected downturns. The initial target price will be $1,940, aligning with the upper Bollinger Band and recent resistance levels. If the price reaches $1,940, we will move the stop loss to $1,880 to secure profits and allow for further upside potential. A secondary target price of $1,950 will be set based on the forecast data. This combined strategy leverages both technical indicators to capitalize on the predicted upward trend while mitigating risk with strategically placed stop-loss orders. Based on the historical data and forecast, BNB shows a sideways trend with fluctuating price movements. The RSI consistently remains below 60, indicating a lack of strong bullish momentum. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, a moderately conservative strategy focusing on short-term swings is advisable. I recommend a long position entry at $570, coinciding with a forecast price and the lower Bollinger Band, with a stop loss set at $567, just below the support level. A target price of $578 is set, aligning with the recent resistance level. To refine the strategy, we will incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, a long position can be entered at the prevailing price, with a stop loss placed slightly below the recent low and a target price near the middle of the Bollinger Bands. Conversely, if the RSI exceeds 80, signaling an overbought condition, a short position can be considered, with a stop loss above the recent high and a target price near the lower Bollinger Band. Combining these approaches, the most efficient portfolio would prioritize long positions when the RSI is oversold or the price touches the lower Bollinger Band, with a focus on capitalizing on short-term bounces and mitigating risk with carefully placed stop-loss orders. Based on the historical data and forecast, XRP has been trading within a defined range between a support price of $1.07 and a resistance price of $1.16. The RSI indicator fluctuates around the midpoint, occasionally dipping below 50, indicating potential oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible rebound. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 40 and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $1.07. Given the recent price action and the forecast indicating a slight upward trend, we will place a stop-loss order at $1.06 to limit potential losses. Our target price will be $1.16, aligning with the established resistance level. This strategy aims to capitalize on the potential bounce from the lower Bollinger Band and the oversold RSI condition, while the stop-loss provides a safety net. This combined approach offers a balance between risk and reward, aiming for high returns within a defined range. Based on the historical data and forecast, Solana has shown a downtrend over the past 2 weeks, with the price fluctuating between a support level of $72 and a resistance level of $81.9. The RSI indicates that the asset is currently in an oversold territory, with values consistently below 50. The Bollinger Bands show that the price has been approaching the lower band, suggesting a potential rebound. Considering these factors, I recommend a long position strategy. We will enter a long position at $76.8, placing a stop-loss order at $72 to limit potential losses. The target price for this trade will be $81.9, aiming to capitalize on a potential bounce from the oversold condition and a test of the resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI crosses above 50, it signals a shift in momentum, reinforcing the long position. Furthermore, if the price touches the lower Bollinger Band and then starts to move upwards, it suggests a potential buying opportunity. We will adjust the target price to $85.8 if the price breaks above the upper Bollinger Band. This combined approach aims to maximize returns while mitigating risks by leveraging multiple technical indicators to confirm the trade's validity and potential for success. Based on the historical data and forecast, TRON shows a slight upward trend, but the forecast indicates a potential downward movement in the coming week. The RSI fluctuates around the mid-level, currently at 45.2, suggesting neither overbought nor oversold conditions. The Bollinger Bands indicate that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I propose a strategy combining RSI and Bollinger Bands to capitalize on potential short-term movements. My strategy involves a short position entry at $0.323. The stop-loss should be set slightly above the upper Bollinger Band at $0.327 to protect against unexpected price increases. The initial target price is set at the support level of $0.32. If the price reaches the support level without triggering the stop-loss, we can consider moving the stop-loss to the entry price of $0.323 and setting a second target price at $0.318. This strategy aims to benefit from a potential downward movement while limiting losses with a well-defined stop-loss. Based on the historical data and forecast, Dogecoin shows a downtrend with recent consolidation. The RSI consistently hovers around the 30 to 40 range, indicating a neutral to slightly oversold condition. The Bollinger Bands show that the price has been trading near the lower band for the past few weeks, suggesting potential for a bounce. The support price is $0.0719, and the resistance price is $0.0778. Considering these factors, I propose a moderately bullish strategy focusing on short-term gains. My strategy involves entering a long position when the RSI dips below 30 and the price touches the support level of $0.0719. The entry price will be $0.0719. We will place a stop-loss order just below the support level at $0.0715 to limit potential losses. The target price will be set at the resistance level of $0.0778, aiming for a profit of 59 cents per coin. If the RSI reaches above 80, we will exit the position immediately. This strategy leverages the potential for a bounce from the support level and a move towards the resistance, while effectively managing risk with a well-defined stop-loss. This is a high-probability, moderate-reward strategy suitable for short-term trading. Based on the historical data and forecast, Zcash demonstrates a volatile trend with a clear upward bias, supported by the recent price surge and the projected increase in the coming week. The RSI consistently fluctuating around the 50 to 66 range indicates neither strong overbought nor oversold conditions, suggesting a consolidation phase before the next leg up. The Bollinger Bands show that the price is currently near the upper band, hinting at a potential pullback. Therefore, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will implement a long position when the RSI dips below 40 and the price touches the support level of $463. The entry price will be $463, with a stop loss set at $456 to mitigate potential losses during a pullback. The initial target price will be $566, aligning with the forecast price for July 23, 2026. To maximize profit and manage risk, we will employ a dynamic target price strategy. As the price approaches $566, we will reassess the technical indicators. If the RSI remains below 80 and the price is still within the upper Bollinger Band, we will adjust the target price to $571, the previous resistance level. If the RSI crosses above 80, indicating overbought conditions, we will consider taking partial profits and tightening the stop loss to $532, the forecast price for July 17, 2026. This adaptive approach allows us to capitalize on the upward trend while protecting against sudden reversals, ensuring a high-return investment with controlled risk. Based on the historical data and forecast, Stellar shows a downtrend with consistent trading within a defined range between $0.181 and $0.202. The RSI consistently fluctuates but has been below 60, indicating a lack of strong bullish momentum. The forecast for the next week predicts a continuation of this downward trend, with prices hovering around $0.18. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.184. To manage risk, we will set a stop loss at $0.189, just above the recent resistance level. Our target price will be $0.18, aligning with the forecast and support level. To enhance this strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it suggests a potential shorting opportunity. The current price is near the lower band, indicating a possible bounce, but the overall downtrend and forecast suggest a higher probability of a decline. Therefore, we will maintain the short position with the aforementioned entry, stop loss, and target prices. This approach combines technical indicators and trend analysis for a high probability, high return investment. The combined strategy offers a balance between capitalizing on the downward trend and mitigating risk with a well-defined stop loss. Based on the historical data and forecast, Chainlink shows an upward trend with recent consolidation. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting a period of low volatility, but are now starting to expand, hinting at increasing price movement. The support price is consistently at $8.3, while the resistance is around $8.54. Considering the forecast for the next week, the price is expected to rise to $8.69. Therefore, I propose a long position strategy. We will enter a long position at $8.34. The stop loss will be set just below the support level at $8.24 to protect against a potential downside reversal. The initial target price will be the resistance level at $8.54, offering a quick profit. If the price breaks through the resistance and continues upward as forecast, we will adjust the stop loss to $8.4 and set a second target price at $8.69 to capitalize on the anticipated upward movement. This strategy combines support and resistance levels with the forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Gnosis shows a clear uptrend. The price has consistently been moving upwards, breaking through resistance levels and showing strong momentum. The forecast for the next week indicates continued upward movement, with prices expected to reach $119. The RSI is currently at 65, indicating we are approaching overbought territory, but not yet at 80. The Bollinger Bands are widening, suggesting increased volatility and potentially a continuation of the upward trend. Therefore, I recommend a long position strategy. We will enter a long position at $114, placing a stop-loss order at $108, just above the support level. Our target price will be $119, aligning with the forecast high. To optimize this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 40, we will consider adding to our position at $114. If the price touches the lower Bollinger Band, it could present a good entry point at $102. Conversely, if the price reaches the upper Bollinger Band and the RSI exceeds 75, we will consider taking partial profits at $116. This dynamic approach, combining trend analysis, RSI, and Bollinger Bands, should maximize returns while managing risk effectively. The portfolio will be 60% long at $114, 20% allocated to potential RSI dips below 40, and 20% for price reaching the upper Bollinger Band. Based on the historical data and forecast, Sun token shows a slight upward trend. The price has been fluctuating within a range bounded by a support price of $0.018 and a resistance price of $0.0186. The RSI values have been oscillating between 45.5 and 68.7, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Given these factors, I recommend a strategy focused on capitalizing on short-term price fluctuations within this range. Specifically, I propose a strategy combining RSI and Bollinger Band signals. We will enter a long position when the price touches the support level of $0.018 and the RSI is below 30. The entry price will be $0.018. The stop loss will be set just below the support level at $0.0178 to protect against a potential breakdown. The target price will be the resistance level of $0.0186. Conversely, if the price touches the upper Bollinger Band and the RSI is above 70, we will enter a short position with an entry price of $0.0186, a stop loss at $0.0188, and a target price at $0.0184. This strategy aims to capture quick profits from the price oscillations within the established range, utilizing both momentum and volatility indicators. Based on the historical data and forecast, Ondo shows a clear upward trend. The recent RSI values have climbed above 50, indicating strengthening momentum. The forecast prices consistently project increases, with a peak of $0.379. Considering the support price of $0.354 and resistance price of $0.367, we will implement a buy strategy. Specifically, we will enter a long position at $0.346, placing a stop-loss order at $0.335, just below the lower Bollinger Band. Our initial target price will be $0.367, near the resistance level. To enhance the strategy, we will incorporate the Bollinger Bands for dynamic adjustments. If the price breaks above the upper Bollinger Band, we will raise the target price to $0.379, capitalizing on the projected upward movement. Conversely, if the RSI dips below 30, suggesting an oversold condition, we will exit the position, securing profits. This adaptive approach, combining RSI and Bollinger Bands, will maximize returns while minimizing risk, resulting in a portfolio with a high return potential. Based on the historical data and forecast, Midnight shows a downtrend, with recent prices fluctuating around the $0.0288 support level. The RSI consistently hovers below 50, indicating weakening momentum. The forecast suggests continued downward pressure, with prices potentially reaching $0.0288. Considering the current trend and the forecast, I recommend a short position. Enter a short position at $0.0296. Placing a stop-loss order at $0.0305 to limit potential losses if the price unexpectedly reverses. Set a target price of $0.028 for a potential 16-cent profit. To refine this strategy, incorporate the Bollinger Bands. If the price touches the upper band, consider tightening the stop-loss order. The center of the Bollinger Bands has been consistently around $0.0317 to $0.0319, so use this as a secondary resistance level. If the price breaks below the lower band of $0.0288, it could signal a stronger downtrend, justifying a move to a more aggressive target price of $0.026. This combined approach, utilizing RSI, Bollinger Bands, and support/resistance levels, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Lido DAO demonstrates a clear upward trend. The price has consistently moved above the Bollinger Band center, and the RSI has generally remained above 50, indicating bullish momentum. The forecast for the next week projects continued price increases, reaching $0.404. Therefore, I propose a long-term investment strategy with a focus on capitalizing on this upward trajectory. Our entry price will be $0.348, coinciding with the start of the forecast period. A stop loss will be placed at $0.322, just below the support level, to protect against potential downside risks. The initial target price is set at $0.366, aligning with the recent resistance level and the forecast high for July 20, 2026. To further optimize returns, we will implement a dynamic strategy adjusting our target price based on the RSI and Bollinger Bands. If the RSI surpasses 80, indicating an overbought condition, we will take partial profits and tighten our stop loss to $0.348. Conversely, if the price touches the upper Bollinger Band, we will consider increasing our target price to $0.399, anticipating further upward movement. This adaptive approach, combined with the initial long position, aims to maximize gains while mitigating potential losses, ultimately achieving high returns for our investors. Based on the historical data and forecast, Polkadot shows a volatile trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates, dipping below 40 on several days, indicating oversold conditions. The Bollinger Bands also show significant volatility, with the price frequently touching both the upper and lower bands. Given this, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. First, we will implement a long position when the RSI falls below 20, aiming to capitalize on the oversold bounce. Then, we will implement a short position when the RSI rises above 80, aiming to profit from the overbought correction. For the initial position, let's enter a long position on July 16, 2026, when the RSI is 45.1, slightly above the oversold level, at a price of $0.86. The stop loss will be set just below the support level at $0.836 to limit potential losses. The target price will be the resistance level of $0.885, anticipating a bounce from the recent low. If the price breaks through the resistance and the RSI exceeds 80, we will initiate a short position at $0.885, with a stop loss at $0.895 and a target price of $0.86. This combined strategy aims to capture both upward and downward movements, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Arbitrum shows a slight upward trend with periods of volatility. The RSI fluctuates between 38.9 and 68.3, indicating both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased price volatility. Considering these factors, I recommend a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. Firstly, we will implement a strategy based on the RSI. When the RSI falls below 20, we will enter a long position. For example, if the RSI drops to 18, we will enter a long position at $0.087, with a stop loss at $0.085 and a target price of $0.092. Secondly, we will use the Bollinger Bands to predict price movements. When the price touches the lower band, it may indicate an oversold condition, and we will enter a long position. Conversely, when the price touches the upper band, it may indicate an overbought condition, and we will enter a short position. Finally, we will consider the support and resistance levels. The support price is $0.0857, and the resistance price is $0.095. To create an efficient portfolio, I will prioritize the RSI strategy for long positions, complemented by the Bollinger Bands for short positions and support/resistance levels for confirmation. For example, on July 17, 2026, the RSI is 46.7 and the forecast price is $0.0908. We will enter a long position at $0.088, with a stop loss at $0.086 and a target price of $0.093. If the RSI falls below 20, we will enter a long position at $0.087, with a stop loss at $0.085 and a target price of $0.092. If the price touches the upper Bollinger Band, which is $0.0916, we will enter a short position at $0.090, with a stop loss at $0.092 and a target price of $0.087. This combined approach aims to capitalize on both trending and volatile market conditions, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Compound shows a slight upward trend with price fluctuating between support at $15.2 and resistance at $17.3. The RSI consistently remains between 44.8 and 54.2, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting a period of consolidation. Considering these factors, I propose a moderately bullish strategy focusing on short-term price movements. We will implement a combined strategy using RSI and Bollinger Bands for optimal results. The strategy involves entering long positions when the price touches the lower Bollinger Band and the RSI is below 30, and exiting when the price reaches the upper Bollinger Band or the RSI exceeds 70. Given the current forecast, on July 17, 2026, the price is predicted to be $17.1. If the price dips to the lower Bollinger Band, which is around $15.3, and the RSI falls below 30, we enter a long position at $15.3. Our stop loss will be set at $14.8 to protect against significant downside risk, and the target price will be $17.3, near the resistance level. This approach aims to capitalize on short-term price swings while mitigating potential losses. Based on the historical data and forecast, PYTH network demonstrates a clear upward trend. The price has consistently moved above the Bollinger Band center, indicating bullish momentum. The RSI consistently stays above 50, further confirming the uptrend, although it occasionally approaches overbought levels. Considering the forecast prices, which predict a continued rise to $0.0526, and the current resistance level at $0.0518, I propose a long position strategy. The entry price will be $0.0493, coinciding with the first forecast price. A stop loss will be placed just below the support level at $0.0475, specifically $0.0468, to protect against potential pullbacks. The initial target price will be the current resistance level, $0.0518, offering a quick profit. To maximize returns, I suggest a tiered target strategy. Once the initial target of $0.0518 is reached, we will move the stop loss to the entry price of $0.0493, securing a risk-free profit. A secondary target will be set at $0.0526, based on the forecast, aiming for a higher return. This strategy combines technical indicators, forecast data, and support/resistance levels to create a high-probability, high-reward trade. The RSI indicates that we are not yet in an overbought territory, allowing for further upward movement. This portfolio strategy will be the most efficient due to its combination of risk management and profit-seeking opportunities. Based on the historical data and forecast, KAITO shows a clear upward trend, particularly evident in the recent price surge to $0.855 and the forecast projecting further increases to $0.939. The RSI consistently fluctuates above 60, indicating bullish momentum, and the price has been trending above the Bollinger Band center line for a significant period. The support level at $0.467 and the resistance at $1.04 provide key boundaries for price action. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.781, placing a stop-loss order at $0.764 to mitigate potential losses. The initial target price will be $0.852, aiming to capitalize on the immediate upward momentum. To maximize returns, we will implement a dynamic target price strategy based on the forecast and technical indicators. Once the price reaches $0.852, we will move the stop loss to break even, securing the initial investment. Subsequently, we will set a new target price at $0.912, taking advantage of the projected further increase. Finally, if the price continues to rise, we will adjust the target price to $0.939, capturing the full potential of the forecast. This adaptive approach combines the strength of the upward trend with the precision of technical indicators to optimize profit potential while effectively managing risk.